Identify your rules. Now, in this section, we'll talk about what rules and what potential rules you might want to add to your strategy. Now, the way you find your rules is obviously by just testing the markets, testing your strategy over and over again until you see one thing isn't lining up right. So you add that as a rule. Let's say a majority of your losses come because you're trading the first 30 minutes of market open. A rule you could add now for your strategy is, hey, I'm not going to trade first 30 minutes of market open. This could also be the last 10 minutes of market close, or it could be I only trade the first hour of market open. It's all dependent on your strategy, and it all depends on the live testing you do while trading. A couple of rules you could add in are always stick to your rules, okay? Now, this is the most important rule. If your rules tell you you have to have a set entry at this price, when this candle closes, when this specific thing on the chart happens, you have to enter or exit the trade. Don't be emotional. Don't hold your hopes and think it's gonna go your way once it hits your stop loss. Don't be frightened and take profit too early. You have to wait, let the trade play out. This is the best way to manage your trade because you're not letting any emotions get in the way. You have to let the trade play out. Remember, there's two options: stop loss or take profit. There's nothing in between. You have to identify, is your strategy good during news or no? When Powell's speaking, does your strategy still work? If yes, okay, news does not matter for you. The same way it doesn't for me. None of my strategies are news dependent. Powell could be speaking, Biden could be speaking, it doesn't matter. Well, Biden does mess up my trades a lot of the time, but I can add that as a rule in the future. If Biden speaks, I just don't trade. But what I found is FOMC, CPI, none of that matters with any of my strategies. And that's a rule I added. I don't care about any news. Another rule you could add is, how big does the order block have to be for you to take it? How big does the dump have to be after the order block for you to take it? How big does your fair value gap have to be? These are all small little details you can add to your strategy. And remember, get a sticky note out, get a piece of paper, get a little whiteboard off of Amazon, write it down, put it next to you. And before you enter each trade, just remember, you've identified your rules already. Now all you have to do is stick to them. Do not be 99% of traders not following your rules, gambling. I could guarantee that's how you'll fail and you won't get anywhere. And remember, when you're in a trade, remember, what would Daryl think of me? Just think that itself will make you follow your rules, okay? Because I'll be very disappointed if you don't follow your rules. Stay patient. Risk reward ratio. What is that? Now, risk reward ratio really matters on how much you enter your contract with, number one, and what your win rate is. You could have an 80% win rate with the 1-to-1 risk ratio. You're risking $100 to make $100 per trade, but your win rate's 80%. So out of 10 trades, you're making $800. For example, it's not going to be like that. That's just mathematically the example I'm going to give you. Now, let's say your win rate's 50%. You're losing half your trades and winning half your trades. If you have a 1-to-1 risk ratio, you're a break-even trader, which is okay. That's good. You're still better than 95% of traders if you're break even. But if your win rate is 50%, your risk ratio has to be over 2-to-1. So that means you're risking 100 per trade to make 200. With that risk ratio, you could have a 50% win rate. Obviously, with a better RR risk ratio, the higher win rate, the better for you. And also, your win rate doesn't even have to be high. If your win rate's 20%, you could literally have a 1-to-10 RR and it'll be profitable. I have not seen that very often, but that's just how it works. And remember, always know what you're risking. On a 50K evaluation account, the drawdown is $2,500. Now, what do you want to risk? For me, I would risk anywhere from $200 a trade to $300 a trade. No matter the risk ratio, I'm always risking that amount because I have to get 7 trades in a row to blow up the whole account. I know, based off of all the back testing, live testing I've been doing, the likelihood of me getting 7 trades in a row that are a loss is kind of low. My account's always in profit, so even if I do get 7 losses in a row, I still didn't blow up the account. Now, you need to manage your accounts properly. Always know where your drawdown is because you might have a trailing drawdown, so keep that in mind. You might want to size down on some trades just because of that trailing drawdown. Should you avoid news? That is the question everybody asks. Now, it's all strategy dependent, right? As I just mentioned, my strategy has no correlation with news whatsoever. It's very robotic. I take the trades when I'm supposed to, no matter if there's news or not. I don't care. But the one thing I do keep in mind is I'm completely okay with taking a trade because of news. Now, let's say we're right here, right? we're just consolidating, and then FOMC starts. Powell starts speaking. He says some crazy things. Market dumps. I have an order block down here that I have my limit order at to enter longs. By him speaking, by moving the market dumps, hits my order block. That is fine. I'm completely okay with that. Being in a trade because of news is fine for me. But the only time I'm a little weary when I'm already in a trade and then news starts, because then they could just start pumping up and down, stops me out or hits my take profit. That is just very, very risky. And if you can get out at break even, I highly recommend you doing that. You don't want to gamble that. And how do I know this for my strategy? I've been trading for 4 years. I know what happens when news comes out. I tested all of 2023 with my order blocks, and what I found is getting in the trade because of news is fine, but being in the trade during news is a whole gamble. The less randomized your trades, the more consistent and profitable you'll become. Trading less is more. You don't need to take every single possible strategy, every single possible trade every single day. That will highly skew your results. That will make you an unprofitable trader, and you won't get anywhere with trading. Trust me, I've seen it. I've been there. My first year was a struggle. Trading triangles, EMA crossovers, head and shoulders, knees and toes patterns every day, everything at once. I was unprofitable, not just because I was trading very bad strategies. It's because I was trading every single one at once. Now, yes, you can add an extra strategy to your roster once you're comfortable with your strategy number one. For example, my strategy number one was bullish and bearish candles off of key levels. Then market started acting weird. We started pumping to all-time highs. There was no key levels for me to trade. So then I adapted, started trading order blocks, went back to my roots, learned, mastered it, and guess what? It's an 80% win rate strategy now with the 1-to-1 RR. And you do want a profit goal for the day. So if your RR is 2-to-1 and your profit goal for the day is $500 and you've made that 500 from one trade, call it a day. You're done for the day. No more trading. Close your computer. Go lay down. Because the likelihood of you getting another green trade just keeps going down and down and down as the day keeps going, as you keep taking more trades. Because remember, the market's always against you. You have to somehow beat the market. And by doing that, you have to stick to your rules, you have to stay patient, and you have to stay disciplined. For example, my order block strategy, I've easily gone 5 days in a row with no trades because I average 20 trades a month. So if 3 days in a row I get 2 trades a day, I'm expecting not to trade for another 3 days in the future because I average 20 trades a month. That's just how it works. That's just how it works. I minimize the amount of trades I take, which in return gives me more profit. And I really want you guys to do the same thing. Do not sit there all day and buy, sell, buy, sell, buy, sell, buy, sell. Literally 3 trades max, 4 trades max. If your strategy is dependent on you taking every single trade, then sure, take it. But don't overtrade. If you've hit your profit goal for the day by a lot, call it a day. Don't overtrade, and do not let your emotions get to you. Identify your problems. If you see you've been making the same mistake constantly, write it down and learn from it. Not only technical problems, but mental problems as well. Don't take trades when you're feeling a certain type of way because you always get off hinge and you always get emotional. If you realize you're taking very bad trades towards the end of the market because you're just drowsy and tired and you can't think anymore, call it a day midday because you can't survive the market for that long. Once you realize you're making the same mistake over and over and over again, or if you just don't know what's going on, look back and reflect on yourself. Realize what the mistakes you're making are and how you could fix them. The smallest tweaks in your day by day, in your trading routine, by fixing those, that could dramatically improve your trades and the quality of them and put you one step closer to becoming break even and then 5 steps closer to becoming profitable. Remember, just do the exact opposite of what the average trader does, what 99% of traders do, and you'll be profitable. The average trader gets emotional. The average trader holds hopes. They don't take profit. They take profit too early. They let their losers go way too long. Understand your issue, work on it, and fix it. I promise you'll be good.